So there's a rule of logic that says the converse of a true statement is not necessarily true. So let me explain that with a simple analogy. A true statement is all polar bears are white mammals. That's a true statement. All polar bears are white mammals. However, flip it around, all white mammals are not polar bears. The converse is not true. Like you could have a snowshoe hare. So the thinking that because something is true, if A is true, then B is true, then going to say that B is true, therefore A is true, that's a flaw in logic. And it's done all the time by many people who are arguing the efficient market hypothesis. It's just a straight out flaw in logic. And so what they're saying is, if the markets are efficient, then the markets will be difficult to beat, and then give you all these examples of how the markets are difficult to beat, which I totally agree. Yes, the markets are extremely difficult to beat. And then they jump from that back to the markets are efficient. It's a flaw in logic. And I can go on, but I think I've killed it. Oh, there's one, I got to throw out one, which is it's one example which is so beautiful. It's a recent one I came across, and I went to see Richard Thaler, who's one of the pioneers, and maybe the pioneer of behavioral economics, and a long time, disbeliever in the efficient market hypothesis. And he threw out this one example, which I just thought was brilliant. There's a closed-end mutual fund that has the ticker symbol CUBA, CUBA. Now, what it does is it has a portfolio of stocks that are invested in Latin America, South America, not Cuba, by the way, but it does have that because I guess it's a catchy symbol, CUBA. So that's what the closed-end mutual fund is. And like most closed-end mutual funds, it was trading at about, it was trading at a discount. In this case, it was trading at about a 15% discount. Which means that since closed-end fund, you can't do it. But if you were able to liquidate the entire portfolio, the portfolio, you're paying 85 cents on the dollar for what the portfolio is worth. That was on as of a given day. The next day, it goes from a 15% discount to a 70% premium, okay? In one day. This is like unbelievable. So what happened? What happened is President Obama indicated he could normalize relationships with Cuba. Now, the wonderful thing about this example is they did not hold, first of all, it'd be illegal to hold any Cuban stocks, and they didn't hold any Cuban stock, companies or stocks or whatever. And secondly, there was nothing in Cuba to own. It didn't even exist. Cuba is a true communist country, and there are no stocks to own. So despite the fact there was nothing Cuban in the whole portfolio, it went from a 15% discount to a 70% premium in one day because President Obama took steps to normalize relations with Cuba. You can't make this stuff up. And yet there are people who argue the markets are efficient, to which I would say, give me a break.